Robert Kiyosaki is an American businessman, investor, author, motivational speaker, and financial literacy activist. He's best known for his Rich Dad Poor Dad series of motivational books and other material. Mr. Kiyosaki has brought a brilliant financial analogy on what separates the rich and the wealthy. In this video, we're going to discuss the topic which will help you understand a lot about the economy. Rich and wealthy are sometimes used synonymously to describe those having large financial holdings. There is a crucial distinction between the two that is sometimes overlooked. Let's examine the lifestyle and attitude of the wealthy by contrasting them to the poor in 4 distinct areas. Education, health, relationships, and expectations are some of those areas where the wealthy differ from the poor. The rich have a different lifestyle than the wealthy, and they think differently. The affluent squander all of their income, whereas the wealthy live within their means. The majority of those who belong to the rich group work hard and make $100,000 a year, but if they worked even more, they would make $1 million annually. Wealth essentially determines what we can afford, but not what we are worth as people. How do they make a living? The wealthy often generate active income or money earned via employment. On the other hand, affluent people often generate passive income or money made through assets. The affluent may possess a firm that creates profits without them needing to be actively engaged, or they may have a job that pays them well. This does not always imply that someone affluent will always earn more money than someone who is employed. For instance, if a doctor only works 4 days a week and can live off of their retirement money, they may be richer than a surgeon who earns $500,000 per year. What counts is how much money someone makes about how much money they spend. Some individuals may still see someone with $100,000 yearly income as wealthy even when they spend $200,000 annually, since their net worth is positive. $100,000 minus $200,000 equals plus $50,000. A person who earns $300,000 a year but spends $500,000 may not be seen as wealthy, since their net worth is negative, $200,000. There are several methods to acquire riches or grow your current fortune. Investing in something like real estate would be one strategy. When you make an investment in real estate and keep it for a while, you begin to benefit from the rent you get each month, or when you sell it for more money than you paid for. Stock investing would be a different strategy. When a business goes public after you buy its stock, the shares are divided into 2 parts. One portion belongs to the firm, known as treasury stock, and the other half belongs to investors, called common stock. Investors who purchase treasury stock before it divides into 2 halves have their shares converted into common stock when the business goes public. You have 2 options: either hang on to your shares or put them up for sale. Spending patterns. Rich people and wealthy people have quite different perspectives on money. The wealthy often invest their money in companies, real estate, and assets that will grow in value. The affluent, on the other hand, are content with anything as long as it's of high quality. Being affluent may not be the ideal option for you if you're presently living paycheck to paycheck. Their identifiable features. The value of one's assets minus one's obligations is one's net worth, which is often used to describe the wealthy. The yearly income of the rich, however, defines them more. While the wealthy have an attitude of spending and pleasure, the affluent often save and invest. Wealthy people are more likely to inherit their riches than to earn them through hard labor. Who exactly are they? Even though they may have a lot of money on hand, the affluent may have other means to increase their fortune. Someone is affluent, for instance, if they own $1 million in stocks alone. The same individual is regarded as affluent and wealthy if they have $1 million in cash, along with some real estate assets and savings accounts. As an illustration, consider 2 people with comparable earnings whose net worth is substantially different because one spends all of their money while the other saves every cent. However, having several sources of income is a sign of affluence. Who desires money and who wants riches? Being rich is different from being affluent. When you're wealthy, you're not required to work. When you're wealthy, time is not a concern. You may either perform activities that make you joyful or spend more time with your family and friends. You'll be able to tell whether you've been kind and sympathetic to others each day. The rich frequently have to work for their riches, while the affluent are usually born into it. The wealthy like to invest their money and keep it, while the rich prefer to spend it. In contrast to the impoverished, the affluent do not depend on others or the government for help, when they are in need. So what did you learn from these? Post your comments in the space provided below. Thanks for watching.